So we just spoke about the perception of value in terms of whether or not it was something that you could lean on from a functional standpoint or an emotional standpoint. I spoke to you about how you can create or identify whether or not something's functional or emotional, and equally whether or not you can find an alternative product that would suffice the needs of your target buyers. And I use the example of this actual setup here, which is me giving you a training course. We're using a camera, we're using lights on the side, we have this digital board, but that could easily have been substituted by me having a laptop and having a whole bunch of slides on there and me doing sort of a voiceover, and that being the course in and of itself. That would have served the same purpose in terms of, is that another product you could have sold to that same buyer group? It could have been because of price, it could have been because of convenience, it could have been for anything. And you could have lent on functionality behind it, how, the ease of use, or an emotional thing in terms of what are we focusing on? Are we focusing on the technology, how cool it is? Is it something that I want to be recognized to be part of? And so those businesses there could look at either creating either of these things from a product group that they have and finding a hybrid, finding something new, or equally, they could look to just identify and hone in on one of these things and really start marketing towards it. And that's really important when it comes to not only finding customers, and the reason I'm making this a point is it's to excite your distributors. You want them to have the same feeling your customers are going to have, because that's what's going to ramp them up. And I'll explain that here, because you're going to look at the emotions that make people buy. And I actually borrowed this from an article from Inc.com. I think they explained it really well. I was looking out for a way for me to explain this very simply. And of course, these guys just did a great job in the way they described it here. You've got greed. What does that mean? Greed is, if you make a decision now, you'll be rewarded. We all know what that one is. If you do something, you're going to get something for it. See, that's why you do it. You're going to have this greater value that you're going to take from it. Fear. If you don't do something, you're toast, right? If you don't do something, you're going to be in a bad spot. And that's a very, very, very powerful selling point. In fact, that, by the way, is the most powerful. And I'd say greed is number 2. Altruism. If I don't make a decision now, I will help others. Or if I make a decision now. Envy. If I don't make a decision now, my competition will win. That's a pretty powerful one too. A lot of people make buying decisions purely on that alone. Pride. If I make a decision now, I will look smart. And of course, shame. If I don't make a decision now, I'll look stupid. Now, if there's enough of any of these emotions coming into play when it comes to your customers, or equally your distributors, when it comes to evaluating your product or service, if there's enough of these emotions coming into play, they will either work with you to sell it or they will come and buy it. And that's really important. But I'm going to focus right now on the one I lean on the most, which is fear. And thankfully, my businesses have always been typically around, well, for the most part, a lot of them have been around real estate investments or money in general. So fear has always been like the strongest emotion that I've lent on. And I'm going to explain that. But let's go back here for a second. You can attribute those to either your functional, your emotional. You're really trying to identify what it is that you can lean on to create this emotion to something that could be functional. It doesn't matter what your product or service is. And if you look at this, now this little diagram has been shared a lot. I think it's pretty much in every business book everywhere. Current target markets. And when this is normally explained, it's really normally explained in telling people to, hey, look away from here and jump into the unexplored world. The point of using distribution networks is not to ignore your current target and start suddenly mass marketing to your unexplored potential customers. It's actually about accessing everything. You and your company independently can target current customers. You can have a portion of your network hit current customers, but you want to be able to allow, or I think the word I'm looking for is to enable your distributors to be able to tap into unexplored markets. Remember I spoke about being able to sell in other countries in different languages. Well, why would those other countries be interested in something? Why would they be wanting the product or service that you have? Well, you want to, remember, it goes back to DSSD, right? You want to set your deal up, create a structure that can be expanded upon, The scalability is there, and everything as far as scalability is concerned does require you to look into what other markets could potentially want. And that really comes into play when I explain to you exactly how I've done it with my business, because all of that's theory, right? So let me show you how I've done it. So the first thing I did with the parking private equity company was, and we're going to focus on DSSD here for just a second. I know I've gone over this quite a lot, but it's, like I say, it's the backbone to everything, right? So I figured out the deal. I like the idea of parking, the structure of it. I set it up in such a way that people were getting real estate. These distributors were able to sell real estate. The margin was there. And we had the scale available because there was enough people out there who wanted to safeguard their money. And equally, there was enough parking available for me to keep buying. And of course, because of that, I could find this distribution. I knew that I could talk to real estate investment companies around the world, alternative investment companies. I could speak to real estate agents in and of themselves here in the US and various other places. So I had this distribution plan set up too. And so that was the overall structure for the parking private equity company. So that allowed me to basically set my company up and use this model to find agents and companies who would be able to sell for me, right? That was the initial plan. That's what I've been talking about this entire time. And of course, I could have my own staff who would be able to tap into all this money that's out there. That was option or plan number one. But I want to talk to you about being able to target people outside of your buyer groups or your typical current customers. Because who are my current customers in this situation? People who are looking for real estate, right? So what's happening here? I'm advertising to, hey, I'm saying this is real estate investments, commercial real estate investments. They have this kind of yield, this kind of term. Do you want it? Are you interested? That's exactly the same thing my agents or my distributors are doing as well. So how do we tap into the other markets? And we're talking about what now? Well, we're talking about stocks. Maybe people are trading stocks, or maybe they don't. And they simply have a money manager. And well, who has money managers? We're talking about people who have IRAs. We're talking about anyone who just works with a fiduciary partner who basically allocates funds for them into the stock market and buys into not just company stocks, but they buy into financial instruments like, investment funds and that sort of thing. They'll buy into real estate investment trust, typical mutual funds and annuities and various others. So that would be an example of that market. And then you had this other thing, specifically at the time when I was building that company, you had cryptocurrencies, which was just huge and it was coming up through the roof. So you had, let's write this here, crypto. And you had Bitcoin, which was being worth it was $18,000 at one point. And you had all these other cryptocurrencies that were being launched that people could just, exchange into and that sort of thing in this other world of, of this trading market. And then you also had these ICOs, which were just taking up all the headlines everywhere, which were basically like these cryptocurrency equivalents of IPOs. So huge amounts of money being converted to cryptocurrencies and then, building up these entities. So there was a different market there of people who were basically buying into that market not because they really understood it. A lot of the time it was more because they had this fear of missing out, this new gold rush. So how did that happen to those markets? Well, that was option number one, right? The traditional thing that I've been telling you. But now I'm going to lean on whether we look at function or emotion and whether we create, remember this? Create or identify how we're going to tap into either a functional element or an emotional element. Okay? So I'm going to show you an emotional and I'm going to show you a functional. So emotion comes first. I'll show you that one. So with USPI, what I needed to do was I wanted to tap into these guys here, the IRA holders. Why? Because they weren't really concerned with their IRA. They just had money out there. It wasn't something that they could get until later on in life because it was managed by their companies and a subsequent money manager. And so what happens is, they'll check on it once a year and then they hope and expect it to have gone up since the last year. And of course, they rely on their money managers to make right decisions for them. So, well, what was this sort of time frame? We're talking around 2017, 2018, at that particular time when I tapped into this market. And what was happening? Well, you had banks, huge banks, pulling like trillions, $500 billion in one instance, $1 trillion in another. They're pulling money out the market into cash reserves. Last time they did that was 2006, 2007, right before the recession. On top of that, you had Trump tweeting every single day, and every tweet that he would make in relation to market or politics would have this huge shift in the market. If you watch Fox News for any longer than 10 minutes, you'd almost have a heart attack worrying about this recession that's constantly going to be upon us. I mean, I've been saying it's going to be upon us for the last 2 years, to be honest. So what does that say to you? It says to you that there's a lot of fear in the marketplace. But were these IRA holders concerned about that? Well, no, because they work in companies, they're doing their day job, and it's their money manager that's just allocating those funds for them. They don't own their money, right? So here's what happens in IRA. I'm giving you my secret sauce in terms of how I was able to pull in millions a week just on sales. So pay attention here, because this is really how I did it. You had IRA holders and they have money managers. And those money managers would buy things like, stocks, funds, annuities, and various other things, right? So they would do this. So what we would do is we would set up marketing companies to tap into IRA holders, and we'd do this by, Facebook campaigns, any type. I'm going to specifically focus on how you can tap into your chosen market in the marketing section. But we did use Facebook campaigns. We did use Google campaigns. We did buy lists. We used media buyers to really retarget these people. Anyone who walked into a Charles Schwab, they walked into one of those locations. As they walked out, we'd get their device ID and we'd be pinging off their phone with various different types of marketing media. So we use these strategies to access these people here, the IRA holders. And the messages that we were sending them was, hey, we would just take the news snippets of the day. So did you see what happened this morning? Fox News headline, such and such bank pulled out half a 500 billion out of the market, $500 billion, whatever the case was, 50 billion, sorry. And they pulled it out of the market. And of course, what does this mean for you? Do you have any money in the market? So we're creating this fear. If you have any money in the market, do you know what to do to safeguard your capital? And that was the word safeguard. Safeguard your capital, safeguard your money. It was safeguard it. Because if you have money in the markets, anything like this, it's bad. Okay. This is a bad place to be, because look at all the volatility. Look at what Trump's doing next. Look at what's happening with the banks. It's a bad place to have your money. So we would have these messages going out. And of course, a lot of these IRA holders would be like, they'd respond back saying, okay, so what is this free consultation you're going to give me on how to safeguard my money? And what we would do is we would work with a series of self-directed IRA firms. Right? These self-directed IRA administrators or custodians are basically, they're not money managers, but they hold your IRA for you and allow you to self-direct where your money is going to be allocated. So if we're telling you the stock market's crazy and scary, what you should probably do, Mr. Jones or Mr. whoever you are, can you take your capital, move it to a self-directed IRA, and then you can at least buy some real estate. You can buy some gold if you want. Something that's got more safety to it, that actually has a safety net to it, because there's real value associated with that sort of stuff. So that was the message. It was, go buy some real estate, go buy some silver, go buy some gold, buy some stuff, or if anything, don't buy anything, just leave it in there. The point is, you want to make sure that you're safeguarding your capital, because this market's going to go up and down. And most importantly, when was the last time your money manager has ever suggested you take the money out the market? Well, he never has, because he only gets paid if the money's in the market. So he might chop and change where the money's allocated, but he'll never take the money out. So he's a bad man. All right. So that's what we made this guy out to be. Put some horns here. All right. Bad guy. So we made them out to be bad guy. We created the sense of fear. fear being the emotion that we're leaning on. Remember that buying decision? Fear, if I don't make a decision now, I'm toast, right? So we're creating that fear. We're using what the news and media is already representing out there, but we're funneling it into them. So they now feel that. So now they're worried about it. So of course, what do? They move to the self-directed IRA. And they're doing that through a custodian, which, by the way, is a separate entity. They are separate to us. We don't get paid, and that's part of the sales pitch too. When you go for a custodian, they're also regulated. So there's a bit of a process to move your money into a self-directed IRA. But these IRA holders are happy to do it. And each step of this process, it's paperwork, right? It's, hey, we're SEC regulated. How's your money earned? What? And they have to go through all this sort of stuff. And then they move it into a self-directed. Once it's in there, how do you think they feel? Well, they feel really happy. Okay. They're safe. They feel safe that their money's here. And then the next thing they want to do is, okay, what do I do with it? Now it's just unallocated. It's just money in a pot. Okay. So their money's here. That's where their money's at. So they want to now allocate it. So it's actually working for them. So then, of course, they've taken some of our recommendations. They're talking to the custodian themselves, and the custodian has this menu of options. Oh, you can buy this, you can buy that, you can buy this. It's all on, they've been vetted with us to the extent that we can list them, but we don't endorse any of them. So that's what the custodians always say. But you have to be vetted before you go in. And of course, we're on that menu. So because we initiated this conversation, we call them back and we say, hey, look, you can, definitely go buy some gold. Whatever it is that they're thinking of, we'll confirm it. So if it's not in the market, it's probably a good thing to do. By the way, we do those parking lots, right? And of course, we then go into the pitch. And if they're pulling in like 600K, a million, like 1 million, 2 million, whatever it is that's in this 401k, they tend to allocate a portion of that. And it's usually a significant portion, a third or something. They'll move that into our properties or our investment offerings. And that's how, when you've got 20 people internally doing that, when you have a distribution network out there doing the same thing, you're pulling in 1 million, 2 million a week. Easy. Or at least we were. So that's an example of really leaning into an emotion to tap into an unexplored potential customer that wasn't looking for real estate investments. They just didn't mind. You're using fear to create that sense of urgency. You've identified that fear, tapping into that emotional, and that's really how you get it done. Now, I want to focus now, the next one is on cryptocurrencies, because that's a bit difficult, right? Because cryptocurrencies are usually a younger generation, lots of money being flown in and out. They're not concerned with real estate. They're into this tech thing. They're into this they're not, you can go up to them with anything other than cryptocurrencies and they're not really interested. But they still want to safeguard their capital, because what's happening with their cryptocurrency? Well, the cryptocurrencies are doing this, right? Right? I remember Bitcoin was like here for like years. And then it just rose crazy. I mean, I remember I bought some like an idiot up here, and then it just crashed. I was like $16,000 or something. Thankfully, it was only $1,000 or so. But that's what happened with cryptocurrencies. And what they would do is all the other cryptocurrencies were available. So these people who own, say, Bitcoin, they'd buy another cryptocurrency, and that would have its own trajectory, which is very similar. It would rise really fast as the market got pumped up, then it would dump, right? People would sell out of it, and huge amounts of money were made and huge amounts of money were lost. So what did they want to do? Because they didn't want to bring their money back into fiat currency, which is like the dollar, for instance, at the time. Because at the time, there was all this hoo-ha, which is about how do you report your earnings in cryptocurrency? Is it considered gambling earnings because it's like trading, but you guys don't consider this currency? You're calling this an asset. There was no real confirmation as to how to declare this on your taxes if you turn it back into the dollar, for instance, or any other currency for that matter. So there was this uncertainty of pulling it back out. And of course, there were all these fees that you would take for converting it back. So a lot of people they were just looking for alternatives within that cryptocurrency, the blockchain market, to basically tether or link their capital to give it some sustainable, or to safeguard the value of it, right? So what we did was and I wanted to get involved with this. I thought, well, I need to get involved with this. There's just too much attention on it right now. There's so much money being pushed in there. Even like my dad, who's like 60 years old, barely understands how to use his phone. He's talking about cryptocurrency. So like everyone's really, because it's all over the news, it's just being pumped up the whole time. So we looked at what we had on offer. And so let's say we have a parking lot and it's 5 million. I shouldn't do that here. It's 5 million. All right. It's 5 million, San Diego. It's right next to an airport there. It's not too big, but it's big enough. It's 5 million and it just takes over. What we do is we went to an exchange in Europe, because the American ones are still trying to figure themselves out. Went to an exchange in Europe and we said to them, what can you do to safeguard? Can you link, can you tether, can you link a currency? Can we create a currency that could be linked to this? And they said, no, there's like a huge process for that and it's going to cost this much. And I was like, well, we're not going to do that. But what they could do was, instead of creating an ICO, which was like the IPO equivalent, which I didn't want to get involved with because the SEC were like snipers with anyone that set up an ICO. They just found you straight away and you'd probably have slipped up somewhere because it was such a new thing that they could find you or shut you down. So we needed to figure out a way, and I really wanted to get involved there because I was just too interested. I was too like curious. There was tokenization. Tokenization was the thing that they could do, which was they would create like call it a tokenized fund, which is basically the same value as this real estate. Okay. And it was capped at 5 million. So that there were only $5 million worth of this token available. And so what would happen is people who had Bitcoin, and I'm not going to list them all. There's like so many, Ethereum and Bitcoin Cash, and I don't know. There's loads of them. What they would do is they would buy or convert their cryptocurrencies into these tokens on that exchange, because that's what they could do. They could do it very quickly, immediately pull money out the currency that they're in that's fluctuating crazy, and they could move it straight to this token, which of course is asset backed, because this is real estate. And those tokens would match the value of this real estate. So every quarter, every year, we get it valued. And if it goes from 5 million to 5.2 the next year, that's the value of their tokens. So they're making money on their money. So it's a safe place to have your cryptocurrency, especially if you've got like $1 million in there and you're trading 600,000 of it and you move 400 grand here just to safeguard it because you don't want to lose it all. It's like gambling, right? This is a fantastic option. And that's how we tapped into another unexplored market of potential customers. People who were looking at stocks, people who were looking at cryptocurrencies wouldn't typically look at real estate investments at all. It was hard to get them to be interested. It was hard to just find them and to have that conversation with them. I mean, in general, even just targeting our current target market, we had to have the deal, the structure, the scalability, and the distribution right, because you've got to talk to accredited investors. These IRA holders had to be accredited. You've got to speak to them. And if you know anything about investments or anything about real estate, when it comes to speaking to someone who's of that caliber, accredited, by the way, means you've got to have $1 million in personal assets outside of your personal residence, or earn $200,000 per year for at least the last 2 years, or $300,000 per year for the last 2 years with a spouse. So it's pretty specific. You have to have that kind of money behind you to be considered to be an accredited investor. When you do talk to those people, they're getting bombarded all the time with different potential opportunities. So to be able to convince them to buy anything is normally a very hard challenge anyway. So you've got a lot of focus here. And so this is what I'm going to show you. How we managed to do all three. Okay, because that exchange was essentially our distributor. Let me just bring this home so you see it. On one side, we had the company, our company, right? In fact, I should do it like this. Just keep it consistent with the diagrams I've been using. So USPI, the parking, and then it goes to me, right? Or my company. So in my company, I have my sales team, right? And in my sales team, I have 20 people, 18 to 20 people, revolving door when it comes to salespeople, right? And they had all their clients and they were able to have access. It's just like access to money. And we trained them on how to switch people from IRAs to self-directed IRAs. And that's how we'd be driving in capital that way. That was one route. Second route was the distribution network. And that was onshore in the US under Regulation D 506C. I'm saying that because I want you to focus on the deal and the structure. And offshore under Regulation S, so we could sell offshore too. So these three companies here could be US, these other two here could be Dubai, one in China. Okay? So they're tapping into this world of offshore investors who are interested in parking. They like the real estate, they like that it goes up, they like that it cash flows. But then remember I spoke to you about, so this one here has the creative trick to achieve a lot more. And over here, we also have the exchange, the cryptocurrency exchange. And what have they done? They've created that bucket, that tokenization bucket, which is basically money. And all of those unexplored buyers are shooting into that and buying parking lots too. So we're capitalizing at every stage, and USPI is growing its portfolio. And sometimes we just sold stuff with a markup, and sometimes we sold things to be where we could become managers. So our company was growing very, very quickly. So that is how you can utilize multiple different distributors. So your own, you being yourself, you're your direct sales, and you have all the different distributors out there. And of course, the exchange, looking into unexplored customers, utilizing ways in which you can figure out where your unexplored customers are, and thinking of either functional. So look, either creating or identifying functional or emotional reasons why they would buy. In the instance of the IRA holder moving to the self-directed IRA, that was triggering emotional. And we were identifying that. And in the case of looking to acquire or access that market of cryptocurrency buyers, the blockchain, we had to create a reason why they would come, and we had to build something functional. We had to build this token, and we could lean on both. But ultimately, you can only do that if you understand your market and where your customers sit. Understanding what their buyer beliefs are, and then either coming into them with the option of greed, fear. Those are the two most powerful ones. When it comes to this example, the other ones don't really come into play. But I want you to go ahead and think about your own business and consider the same elements. What are the main buyers within your business and industry? Who is everyone targeting? So that would be your current target market. And who is everyone not targeting? So that's your wider market. And can you target a different buyer group with a complementary product, so something on top, or a hybrid concept? So that tokenization was a hybrid concept in that example. And what can you change or add to your product or service to create an emotional buying or buying decision on a functional product, or vice versa? So if you've got something functional, can you create an emotional tether to it? Or if you're selling something emotional in a very heavily, competitive emotional marketplace, can you create something that is functional, a functional reason why someone would buy it? So consider these options significantly when considering what company or what it is that you're going to be selling, because the next sections we're going to be focusing on whether or not you should be selling or focusing on building a product yourself and selling that and the pros and cons that go with that, or whether or not you should be picking and choosing someone else's product and the pros and cons that go with that. So I'll see you in the next section.